And welcome back to Fantasy Stockball, a new level investment management LLC week 4, and this season is flying by, right? This week we're going to switch things up just a little bit. I'm going to give you a quarterback, but I'm actually going to the Cowboys and Saints game Sunday night, prime time. So I'm going to give you a few players from that game to go with your stock selection. Hopefully we've been making you some money. Hopefully your portfolios are growing. That's the whole point of these videos, is to give you a NFL meets Wall Street perspective on these stocks, right? So we're going to go with our quarterback, and it's none other than Aaron Rodgers, Golden Boy. Probably one of my favorite quarterbacks in the NFL. He has all the intangibles. He can run, he can throw, he makes all the right decisions most of the times. And we're going to match him up with Walmart. Similar to Aaron Rodgers, Walmart's the best of both worlds. They pay a really good dividend yield. Plus, they grow as if they're a startup company. Balance sheets are incredible. You know, they've been around for years. But I found some stats that I thought were pretty interesting. I found some average price to sales book and average dividend yield for the S&P 500, and I'm going to compare those numbers to Walmart's numbers. So first up, the average dividend yield for the S&P 500, and these are all the companies that make up the S&P 500, is 2%. Walmart's is 3%. So that's a win there. Price to sell for the S&P 500 is actually 1.6%. Walmart's is 0.43%. And with this ratio, you want to get as close to 1 or below 1 would actually be better as possible, and there's no competition. Now, I do want to throw a caveat out there at you. Usually when you compare these types of ratios, you want to do, if you're looking at a particular company, make sure you're comparing that company within that sector, right? You don't want to compare a bank stock to a tech company, right? That's apples and oranges. But just to give you some perspective on some of these ratios. Price to book for the S&P 500 is 2.7%. Walmart's is 2.6%. So we can call that a draw. And price to earnings ratio, PE, for the S&P 500 is 18.6. Walmart's is a whopping 13.31, so that's good there. Return on equity for Walmart, 19%. That's great for a company that's been around for years. And revenue per share is $150. Walmart currently trades around $63 per share, so their revenues per share is $150. So I think that's very telling. Walmart is right for the picking. You know, the market has been slamming Walmart this year. I think their 52-week high was roughly around 91. They're around 63 now. 3% dividend yield and stock appreciation. You can't beat it. Buy Walmart stock today. And last but not least, again, I'm going to the game. So I'm going to give you some players from the game. I'm going to challenge Joseph Randle and that offensive line to really put the team on their back and get Cowboys a victory this week. I'm also going to throw Darren McFadden in there as well. When you get in the game and you get your opportunities, you have to make the best of it. Best of them when you do. He did it last week, but, you know, we need to see more. And then I'm really going to challenge Terrence Williams. He had 0 catches last week and actually had 2 drops. With Dez Bryant being out, Romo's gone, you have to be the man. You have to be the guy that's going to win on the outside and open things up for everyone else. So I'm challenging Terrence Williams. And I'm going to compare those guys to U.S. Silica Holdings. It's a fracking/oil company. And just like the Cowboys, this company's all over the place as far as their stock, their stock price. It's very volatile right now. It's trading with oil. Oil has been slammed this year. So, of course, these fracking/sand companies are going to get hit. But I think this company is going to be right for the pickings when the market turns around. They have a really good balance sheet. They pay a decent dividend. I think it's been slashed once or twice, but it's still slightly decent. It'll pick back up once those earnings pick back up. But I think they'll be one of the companies that are going to be able to last this beating down of the oil industry, if you will. So I really like this company for long term. You have to be able to stomach a company like this, which means you might lose 20-30% on your investment in the short term, but in the long term, this could be a big money maker, a 10-bagger, as Peter Lynch would like to say. So that's all we have for you this week. Hopefully you learned something. If you have any questions or if you want to talk more, my information is going to be in this video. New Level Investment Management LLC.